Hello, everybody, and welcome back to episode 2 of my podcast, a brand new podcast. I dropped the first video last week, and as promised, I have video number 2 this week. I am bringing on a very special guest for you guys, which I will be introducing a little bit later on in this video in just actually a couple of minutes. But before we do so, I just wanted to give you guys a quick recap of what we had discussed last week. So last week we had gone into talking about the market conditions in regards to what specifically was happening with the Vegas market, and today it's going to be a little more specialized in what's happening in the finance world. In order to bring you nothing but the best finance news, I have brought none other than Joseph Worrell joining me on today's podcast. Hi, Joseph. How are you?
Great, Samantha. How are you doing today?
I am doing fantastic, Joseph. It's a pleasure to have you here on today's podcast.
Thank you for having me.
Thank you for joining. So before we get started into some finance news, Joe, can you tell us a little bit about you and how you got started in the mortgage world?
Oh, wow. We're going way back. 1993 I started, which was a crazy time. Interest rates were 7% at the time.
Wow.
And I remember this because when you get into the business, the best way to start is by doing refinances.
Yes.
There's too much at stake with purchases, so you got to figure it out first. And that's what I did. And I would go, this is before the internet. All right, not that I'm that old. But I would go to the courthouse and write down the names of people that had a mortgage from 1989, because in 1989, interest rates were 11%.
Wow.
And these loans are just sitting there. They don't sit there anymore because 17 people will call you a day if you're 4% above market. But back then, I would go to the phone book, call them at night, and refinance them.
Wow.
And that lasted till, that was the fall of 1993. That lasted till the spring of 1994, because interest rates went from 7% to 9% in the course of like 2 weeks.
Wow. Talk about
insane.
like high interest rates. For everybody that's complaining about higher interest rates nowadays, you've been in the business long enough to obviously have witnessed higher than a 6.
We're spoiled. What just happened was generated by our government, right? So the government was buying back mortgage-backed securities and bonds, and they were creating a refi market and also a purchase market by having 3% and even lower interest rates. In my opinion, the only way to get down to 3% is if it's done not organically, if we actually create it. And so we literally spent over the last 14 years about $7 trillion doing that as a government. So yeah, but most of my career, 6.5% was the norm. When they were in 5.5%, that was good times. Right?
Yes.
7.5 bad, 5.5 good. But yeah, I started when they were 7 and they went up to 9.
So Joseph and I actually go way back when he was first working for Residential Bancorp. That was the first bank that I started working with. Joseph is actually one of my preferred lenders, and I have been working with Joseph for quite some time now. And he was actually the very first lender that I started working with when I first started in real estate. So we go way back, and it's been a pleasure to work with you on many of our clients' deals and make homeownership possible for the families that we get to work with.
Thank you, Samantha. It's been great working with you as well. So customer first, right?
Yes, client first. And Joseph actually made a switch just last year, correct?
Yes.
And I actually wanted to ask you, why did you switch over from Residential Bancorp? Because I thought you were actually really happy with them.
The Residential Bancorp was purchased by somebody else, and it's not the same thing anymore, right? And what was great about it is the process. We could create a process, follow through. If you wanted to know when something was closing, I could tell you specifically because we had complete control of it. But after it, they got bought out, right? And things started to change. I had to make a decision. And what I had come across because of the market, high interest rates, high prices, right? Because the housing prices were going up, and so were the interest rates. Even with the high interest rates, it was still going higher and higher. We were qualifying people, but nobody was ready to pull the trigger. And the reason was money out of pocket, high payment. They couldn't do both. And so as a mortgage broker, I'm dealing with, first of all, I went to Edge Home Finance. They're pretty much the largest or close to the largest, depending on how you calculate it, brokers in the country. Over 1,500 loan officers, loan originators, big company. But I went there for not because the big company, more brokers. More brokers, great pricing because of our size, the volume that we can give these investors, and they're all competing for you to get my business, right? They're trying to get your loan through me. And how do they do that? Price and process. And so we're dealing with the top of the top lenders in the country, and it's fantastic.
The creme of the creme, or
Creme
if
de la
that's
creme.
creme de la creme.
Yes.
The creme de la creme for those of
Yes.
you, just so you get an idea of what you're working with. But that's actually one of the things that I always like to advise my clients, especially when they're first-time home buyers and they're not as knowledgeable when it comes to lending and product shopping, is for them to speak with a mortgage broker. A mortgage broker has so many more options than just a regular traditional lender.
At that, Samantha, I will tell you, just an example came across my desk yesterday. I have somebody that has been in business just about 2 years, and what they showed on their tax return the first year, not so good. They're about to do their taxes the second year. So we can wait a year and have 2 good tax returns, or we could do something called either a 1099 or a bank statement loan. In the past, as a mortgage banker, I had like one investor to go to. I have 100 investors I can go to. No, not really. I do, but I'm probably going to go to the 6 top investors and see who's got the best price and who's got the best terms, right? What's the best and highest calculation for their income? What rate can we get? And let's get them the most house that they can afford, right? And I didn't have that before. Same thing with, when I started back in New Jersey, I was always focusing on very low or no down payment. First-time buyers. That's like the most rewarding thing we do. I don't know whether you agree, Samantha, but I love doing, seeing the keys in the hand of a first-time buyer. They love it. It's an amazing experience.
I definitely have to agree with you, Joseph. It's one of my favorite things to do as well, especially coming from a family that was not actually able to become homeowners prior to me becoming a homeowner. So I totally understand the whole entire process and how intimidating it can be for somebody that has no one else to ask advice and guidance to, and they're really honestly just relying on the professionals.
Yes.
Speaking of first-time home buyers, a lot of people miss out on the opportunity to take that first step into home ownership because they think they may not be able to afford the payment to get into a home. And actually, that can be nothing but the truth, especially in today's market. Can you tell us a little bit about the programs that are available out there for first-time home buyers, Joe?
Absolutely. So coming here, working for a mortgage banker, we use the Nevada Housing Division's product that's called the Home is Possible. And the Home is Possible has been on a little bit of a roller coaster, in my opinion. And I say that because when I started using the product, it was a 3-year prepayment penalty, and it was prorated. So if they gave you $15,000 and in a year and a half you wanted to refinance it, you had to come up with half of the $15,000, which would be $7,500. As time went on, they went to a 5-year not prorated, which meant for 5 years you were stuck with that interest rate. When rates were 3.5%, that's not such a bad deal, right? Stick with it. It's not, it's a little higher than market, but let's go with it. But now when rates are 7.5, or wherever they are, whichever week we're talking about, you're stuck with that for a 5-year period. And recently they switched to not giving you the money. It's not a grant. It's basically you're financing it. So as a broker, again, more investors, more products, I have about 12 of them that I can go to. And what's really cool is there's a lot of things that can disqualify you for down payment assistance, and a lot of it is income, credit score. So I have down payment assistance you can do as low as 600 credit score, and I have some that have no income limit. You'd be making $1 million and get a first time buyer program. So
wow, that's
it's
truly
cool.
fantastic.
Yeah.
It's awesome, especially when you compare it up with concessions, which is something that we are currently still seeing in the market.
Yep.
So for a lot of the first-time home buyers that are also waiting for rates to drop, they think that it might be a better opportunity if they wait, if at least rates drop at least 1%. Can you tell us a little bit more about what would be the benefit of purchasing now in today's market?
Absolutely. And so, nobody really knows what's going to happen. There's really nobody in the country that knows for sure what rates are going to do, what housing prices are going to do, but we can make educated guesses as to how this is all going to evolve. As far as rates, I really don't know. They might just stay right where they are and fluctuate up and down a little bit for a while. I do think that we will see them go down, whether it be in 6 months or 2 years, we don't know. A lot of people are like, why now? We just want to wait. And at the risk of sounding like a salesperson, I can honestly tell you, over the last 2.5, 3 years, when rates were high and prices kept going up, you can identify the why now. And that is literally, if you're bidding on a house and there are 7 people bidding on the same house, it's going to be hard to negotiate a lower price and closing costs. So the best time in the last few years is when the market was a little soft, even with the rates as high as possible, because you could go in there and you can just come in with your down payment, or in some cases, no down payment. You get down payment assistance. They would cover all your closing costs, and you're literally getting in the home for the price of a home inspection, $350. So that's the why now. Now, literally, we could be a month, we could be 5 months, we could be a year away from, and it could be a roller coaster. Sometimes we'll be able to get the closing costs, sometimes we can't, and it's worth the risk of getting out there and getting in where you don't have to come up with a ton out of pocket. It makes it a lot more affordable, and it's always more fun to close on your home with money in the bank.
I definitely have to agree with you on that. And just to add to what you were saying, if you had any thoughts about possibly jumping into the market, don't let the rates scare you away, because like you were saying, we can at this point negotiate concessions, which you can also utilize to buy down your rate.
That's right.
So you don't necessarily, it doesn't necessarily mean that you're going to end up with a 7% interest rate.
Right.
But that market is quickly changing. So I would suggest pulling the trigger sooner than later, because as you and I have both seen, we have 2 clients that we're working with right now.
Yes.
And
it's been a little crazy. So
yeah, we started off really strong just a couple weeks ago, where we had a bit more negotiating power, but I am seeing that that's quickly going away.
yes, and it could quickly come back, but we don't know.
Yes.
So another reason for why now, all right, is a lot of people are waiting for that interest rate, and that interest rate will save you money. There's no doubt about it, but will it, right? So let's just use a number and say rates are 7%, as just for argument's sake. And you want to buy a house when they hit 6%. Well, at 7%, maybe you go out there and there's not as much interest in the market because rates are 7%. You go out there, you put an offer on a house, and you get all your closing costs paid. And now you have 7%. But guess what happens in a year? As soon as rates do go down, while everybody else is trying to shop, get their closing costs paid, you've already got your closing costs paid. You refinance, you get the lower rate too. So you get the best of both worlds.
And a common misconception that I see is people thinking that they have to wait at least 2 years to refinance. So can you give us more info on the refinance?
So the minimum term you have to wait is about 6 months, right? It's a little bit different for VA, FHA, so 6 or 7 months, depending on what kind of loan you have. But 7 months doesn't guarantee that you're going to be able to do a refinance because the rates have to be a little bit lower, right? And so what I try to do is do very, very low cost refinances so that if rates continue to go down, you didn't waste your money for the first refinance, right? So if it didn't cost you any money and you save a little bit every month, that's a good thing. And then, oh, by the way, if they go down again, let's go get that rate too. And you're not out a lot of money.
Thank you so much, Joe, for sharing this awesome information with us and for our audience, giving them some great nuggets. Before we get going, I would like to ask, who is Joe? Because everybody on my socials knows me. They see a lot of me on social media, and this is probably one of the first times that we get to see Joe online.
Yeah.
Which, by the way, I don't take that for granted. So thanks again for being here.
Thanks for having me.
Before we go again, so who is Joe? What do you like to do? What can we expect to see from you as you embark in this new social media journey?
Yeah, the social media. Wow, here I am. Who I am? Well, I'm Joe the mortgage guy, right? Depending on who knows me. Some people know me as Joe the golfer, Joe the pool player. I used to play a lot of pool. I used to own a pool hall back east where I'm from, long time ago. But I play competitive pool, and I also play competitive poker. I like to play poker tournaments, so it all keeps me pretty busy.
That's something that I'm wanting to learn. So hopefully we can make some time and you can teach me. Yes. And I can trade you and teach you the social media game.
Yes, help.
Yes, so Joe does not have his socials ready, but as soon as he does, I'll be linking them in the bio. So you can go ahead and give him a follow. If you haven't already met or had the opportunity to meet him, you will be getting to see more of Joe online. Thank you guys so much for joining me on this amazing journey that I'm embarking on. I'm super excited to consistently post on YouTube. Finally, it's been a journey. I've started my YouTube channel about maybe 4 years ago, and I'm so proud of myself. This is my second week on a roll filming. You guys can expect more of Joe and myself at least twice a month in the beginning, and maybe once or twice a month, but we'll definitely be aiming to film at least twice a month. If you haven't already, don't forget to like, comment, share, and subscribe, and we will catch you on the next video.
Thanks, Samantha.